Hello and welcome to my new office. I mean, you can't actually see the office because of the green screen behind me, but I'm so excited to have my own space where my kids won't be crawling all over me, or I won't have to change diapers in the middle of a video, and it's great. So anyways, without further ado, today we're going to talk about Pendle. If you don't know who I am, I'm Steven the Calculator Guy, the founder of DeFi Dojo Discord, the most knowledgeable crypto Discord and all of DeFi. Anyways, today we're talking about Pendle Finance. What is Pendle Finance? Pendle Finance is this interesting protocol that separates the yield from an asset and lets you sort of trade the yield individually from the underlying asset. So that's probably kind of sounds confusing. That's why we're going to look into it. So before we do that, I need to change this configuration a bit. So, oh, there, I'm invisible. Oh, here we go. All right, so basically, this is Pendle. Pendle has been around for a while. I think I actually did a video about them almost a year ago, and V2 is finally out, which is why I'm doing a new video about them, because V2 is pretty interesting and robust, and currently they're highly incentivizing liquidity, which is what makes this pretty interesting from maybe an investor's standpoint. So that's what we're going to be looking into. So Pendle, again, is a protocol that separates the yield of an asset from the asset itself, allowing you to trade both of those things completely separately. Let's dive in. So if you click on Launch App, it opens up this, and you can see on the simple version, there's two versions, Simple and Pro. I like, well, you know, Pro is more fun, but Simple is very easy to understand, kind of. Basically, with Simple, you can see all these different assets, Ethereum, USDC, and Lux. You can get them at discounts, which effectively just means that you can buy USDC, as an example, for like 99 cents instead of $1. And then you can buy Lux for 13 cents instead of 14 cents. You can buy ETH for 1206 instead of 1222. And then, you know, in 112 days, the discounted asset you bought will actualize fully into a mature version of ETH, USDC, or Lux, and congratulations, you can redeem it for its full value, you know, making a total of $14 here, a penny here, and a penny here. So this probably isn't super interesting to you. However, when the next round of these comes out, after these have matured, maybe there will be bonds that are slightly more interesting, or rather, maybe it'll be the case that they introduce new assets with maybe higher yields that have more discounts for these sort of bond-like mechanisms. So this isn't really where the interest lies, in my opinion, but if this kind of thing excites you, then by all means, you can participate in it. Pools is probably where the majority of people will find something slightly more spicy or interesting. So you have the ETH pool, the USDC pool, and Lux pool, same three assets, with some, I don't know, some quite nice APYs. Now, let's understand here that these are boosted APYs. So if you're familiar with VE tokenomics, that's what's going on here. You have vePendle, so you have vote escrow, Pendle. You can lock it up. You can vote on these different, I'll call them vaults here, or pools, and those boost the APYs, and the more you lock and vote, the more APY you get. However, the underlying APY, or the starting point APY, is pretty nice as it is. So we're going to check those out here in a second. But basically, like, if you don't understand these mechanics, there are plenty of videos out there on YouTube about VE asset mechanics, curve and convex sort of leading the way in all of this stuff. You know, you buy Pendle, you yield Pendle, whatever it is, you lock it up, and then you vote on your pool of choice to sort of boost those rewards. All right, but let's look at ETH, right? The base APY is 45% without having any long exposure to Pendle if you didn't want to have long exposure to Pendle. Now, maybe you do. Maybe you are interested in doing the voting and the locking mechanics because you found that's been profitable for you in the past. That is a decision that you need to make, not a decision that I'm going to make. 45% is perfectly fine for me for ETH. I'm excited about that, unboosted. Maybe I do want the 100%. Who knows? So here, you can take your ETH. I don't have very much ETH in my wallet right now. I could put it right in there, click deposit, and then it says with 0.61 ETH on March 2023, I will get Ooh, an estimated yield of $89.8. That's cool. I wish that I could actualize that yield today, kind of like you can with the other products on this, but you can't. So still quite nice. You're going to be earning this almost completely in the Pendle asset. If you hover over the APYs, which you'll see, I can actually zoom in a bit, is that the majority of this is in Pendle incentives, 40% out of the 45%. That's, if we're looking at ninths, I suppose, that would be 8/9 of this is in terms of Pendle incentives. The rest of it is an SY interest. SY is the standardized yield asset. And then PT is the, I want to say this is the interest. I forget what it actually stands for. Principal token, no, principal token. So PT is a principal token. SY is a yield-bearing asset. And this is effectively being LP'd. So you have intrinsic interest of the yield-bearing asset, and then you have PT, fixed APY. Those all add to this total APY here, and then swap fees generating about 0.11%. Nothing super interesting there. Again, the majority of your APY is coming from Pendle emissions. Now, cool. That's about it, I think, for the simple mode. You can look at dashboard where all of your positions will be if you're interested in monitoring your positions, which I'm sure you will be. Also, you'll be able to claim your rewards as they become available to you throughout the duration of your investment. And again, if you click vePendle, it'll open up this where you can go and lock your, if you don't want to sell your Pendle, instead you want to lock it up to increase your yield, certainly you can do that utilizing the VE mechanisms. Okay, cool. Let's now look at Pro, because Pro is where a lot of the interesting stuff is happening, in my opinion. Go back to market, and instead of seeing those 4 vaults with like these discounts, what you see here is something slightly different. You see the name of the asset, very similar. You see its maturity date, very similar. The underlying APY, that's kind of different, right? So these are the APYs of these yield-bearing assets. So STETH, the Frax USDC LP, or the LooksRare asset. And then the implied APY, which is slightly different. This is the average APY that the Pendle AMM market is estimating due to the trading of the yield. So as I said earlier in this video, this product separates the underlying asset from its yield. So the yield is trading at an implied APY of 4.63%. Now, that kind of means under peg right now, so you could maybe take an arbitrage-ish bet and buy the yield under peg, hoping that it goes towards peg. STETH has a relatively stable yield, and as it matures, it's kind of like you're buying the yield under peg and getting yield on your yield. Because when the yield matures as well, as it closes on maturity, and we know that STETH is probably going to continuously have around 4.8%. This implied yield, this yield-bearing token, this YT asset, right, the yield token, will approach or approximate that 4.8. So anyways, the long yield APY price, this is effectively the estimated yield on your yield, or rather, historically how that yield has performed is 5.7%, meaning that this yield from the implied yield to the underlying is going to increase at an APY of roughly 5.7%. Here, same thing, except maybe at 10.9% because it's even more under peg. And then Frax USDC, you can see it's right now it's at 2.4, has quite a ways to go. But Frax USDC being a slightly more volatile, actually much more volatile yield, ranging anywhere from like 1.2 to 4%. So this is more of a speculative play here. You would purchase this yield at 2.4%, hoping that it goes up, but it may also go down. The cool thing here is that you could short these yields, right? You could mint the yield and then sell it immediately, hoping the yield goes down, and buy it back when it goes down, and then return it to redeem, right? So it's effectively, if you're familiar with shorting mechanics, it's very similar to that. Okay, anyways, I digress. And then looks here, drastically under peg, right? Great APY. And yeah, there's that. Of course, this is going to be a volatile yield as well. So Then you have the fixed APY on the PT price, right? So the PT is the principal token. Principal token being, in this case, like ETH. And then in this case, I guess you could just call it like stables, but you know. And then looks being the final one here. Now you can click on any of these to open up the markets. So let's open up a market on Frax USDC on the principal token. Currently, this principal token is buyable at 0.9932. So if you wanted to, as an example, buy some of this with, can I do it with USDC? Do I have any USDC? I don't, but let's just say I did. Let's say I had USDC in my wallet and I wanted to use my USDC to buy some of these. I could buy just this principal token and get, a 0.5%, 0.5% gain. And then I would have to wait, of course, until expiry or until the maturation date to get my full $100.5, $100.50. Not necessarily the best play, but possible. So you can do this with the PT or the YT, right? As I said, you can speculatively bet on the yield, which is quite interesting. If you wanted to do this one, I would probably look at the looks, which is more volatile, and say, let's zoom out a bit. Let's look at a daily market instead of an hourly. You can see here, quite a bit of volatility, not a ton of liquidity, which is why they're incentivizing liquidity right now, because the more liquid these markets are, the less choppy these graphs will be, and the more efficient the speculative betting will be, right? So right now, if you opened up a large position, you would probably have some slippage, you have some price impact, as it goes. But let's say you thought, okay, I think the looks APY is going to increase. You would buy it now as a speculative play, it increases, and congratulations. Now, this gets really interesting when Pendle adds things like Aave, because we know during bull markets, as an example, or during, whenever Aave tries to exploit Aave, yields can go really high, right? Borrow rates can skyrocket, interest rates can skyrocket. So if you get in on, let's say, ETH, for an example, Aave wrapped ETH or Aave wrapped Bitcoin at a very, very low interest rate, just waiting for the day that it shoots up, it could be a decent play, right? Conversely, if they add an asset like Looks Rare and you think 50% is quite high for Looks Rare's yield, you could, I'll show you right now, you could mint PT looks and YT looks. So let's say we have 100 well, this is not a lot of money, but you have 1,000 looks, still not a lot. We would get roughly 1,000 PT and roughly 1,000 YT. You would immediately sell your YT again being the yield token, because you think the interest is going to go down, right? You think that 50% is too high. You think it's going to go down to 25%. So you short your yield. Looks APY does go down 25%. You buy that yield back for half the price, and then you return your YT and PT. You redeem your YT and PT for your looks. Okay, hopefully that made some sense. For people who are sort of familiar with these mechanisms, like I think what I'm saying makes sense. For people who are unfamiliar with these mechanisms, I'm probably speaking, French to them. But that's basically it, guys. So it's not as complicated as one might think. And what I'm really interested for, I am enticed by these LPs, right? I don't mind selling Pendle rewards. It's a semi-liquid market. So this is kind of a neat farming play. Just, you have to daily sort of reap those rewards and sell them when ETH gas is low. You can do it weekly if you want. No big deal, honestly. But I'm interested in the future of these kind of mechanisms because speculative bets on yields get really interesting depending on where those yields are coming from. If they're coming from lending markets, then those are very volatile. But you can almost expect they're going to go up with high utilization and then back down to normal with low utilization, like clockwork. So being able to speculatively play those could be a lucrative market and could be a fun thing to do for those who are really sort of interested in those kind of plays. And then these PT assets, these just are the principal underlying asset that will mature to the price of the underlying ETH stable or looks at the maturity date. So it's when they say you're getting it at a discount, you're buying the PT and waiting for it to mature. So pretty cool, I think. Well, guys, that's it. Let me get big again, right? I'm gone. There I am. That's it for Pendle. Go and check it out. Of course, if you're more interested, join their Discord. They're not a sponsor, by the way. I just think it's a cool protocol. There are other protocols like this. So understanding how Pendle works will help you understand how a variety of other protocols like this operate. And it'll increase your DeFi knowledge and your DeFi and the opportunities you're able to understand and see, which at the end of the day is kind of like my goal, is to make my viewers as savvy and as fluent in the language of DeFi as possible, so that you guys can go out and see opportunities and then act upon them because you've seen and noticed and understood them. So that's it. If you want to talk about things like Pendle or these interest-bearing assets and how separating yields may generate opportunities, by all means do join the DeFi Dojo. You guys know this shtick, right? I'm not going to pitch it. I love it. And that's it. So thank you all so much for watching, and have a wonderful rest of your day.